Hey guys, it is really hard to be in business, any kind of business, not just restaurants, but any form of business without knowing and understanding what a P and L is. A P and L stands for profit and loss. Now, they're pretty simple to understand. At the top of a P and L is all of the money that comes in, and then the rest of the profit and loss sheet is all of the expenses that came out. When you get to the bottom, you have what's called your bottom line. What's left after you have money in, money out, whatever's left is your net profit. It's what you've earned. Now, what I want to explain is why we don't use them, why you don't see them every day, why I'm not showing them to you and bringing them to you, and how you're supposed to know whether or not you're profiting or not. You see, a good majority of our P&L is based off of controllables. There are certain numbers that you have the ability to control, and those are increasing sales. That's the number at the top that all the other expenses come out of. You want to grow that. You don't need a P&L to tell you whether or not you're bringing money in or not, and you don't need it to see if you're increasing. You should always be aware of whether or not your sales are going up or going down compared to last year and compared to yourself. Next is food and labor costs. Food and labor costs are really the only major thing that you have any control over in a P&L. See, a P&L has things like rent, it has electric bills and gas bills, it has CAM charges, which are when they sweep the parking lot. It has a whole lot of different things added into it that you don't have a lot of control over. They're important, and they're definitely things that we look at and we observe, such as a water bill spiking up or an electric bill spiking up. Maybe your compressor is frozen up and that's going to cause it to run more frequently. So there are some things that we can look at, but for the most part, we can't control them, and they're way too small of numbers. Even if your water bill doubles, it's not nearly the same as if you're able to change your food cost by 1% or 2%. So the numbers that we're truly looking at are food and labor, and those you can control. Now, why not use the P&L just for those? Profit and losses, as they usually come out of QuickBooks. They come out of the place where we put all the numbers into the bookkeeping. That is a very delayed process. It is not as up to date as you are in your own very store. See, you send payroll, and you know what your labor percentage is at the end of each week. You put that percentage into your sales tracker. However, when the checks are written for the following Friday. So your payroll is actually one entire week behind. So when you look at a P&L, you're looking at payroll that is a week off. And that can play a big difference if you have a big week and then a slow week. Your slow week will have much higher labor, not because you worked more people, but because the numbers in the week, or when the people are being paid, is the following week. So they're being paid for the busy week, even though your sales are for a slow week. That can kind of confuse people. Next is your food cost. Our food is on a credit. We don't pay it the time it comes in. The very moment that food comes in, we get an invoice. That invoice is then drafted out of our account 2 weeks later. 2 weeks. So if you order a whole lot of food, but then your sales are going up, your food cost will appear to be lower on your busier months. This frequently happens in the early months of the year, such as March, April, and May. Our profit and loss statements look very, very good because we're constantly getting a little bit busier, but we're using numbers that are 2 weeks behind. So the numbers appear to be better. It's the opposite in September, October, and even August going into that, because your sales start to decline as school gets up and running. In that decline, you're seeing food bills for the busier summer months, and you're paying them 2 weeks later when you're slower. You're literally paying those bills when you're slow, even though you made and bought the food when you were busy. So that's two major reasons right there not to look at the P&L and to use your sales tracker. There are also a couple other random things on food bills that people... There's also a couple other random things on P&Ls that people kind of miss, they kind of don't understand, and that is bills float. So your electric bill, you use the electricity, then they bill you for the electricity, then you pay it. So again, we're almost an entire month behind when we pay electric bills, when we pay water bills, all of these bills are behind. And so profit and loss statements, again, can be kind of confusing. And then last, and one of the most important things, is we typically divide a P&L statement into months. It is divided into how many months there are. So there's only 12 P&Ls in a year, and we look at one single month. However, each month has days that line up differently. So let me give you an example of this. Let's look at the month of November. In the month of November, you can see how many Fridays happen in November. We've got 1 Friday, 2 Fridays, 3 Fridays, 4 Fridays, and 5 Fridays. Why does the number of Fridays matter? It matters because that's when people get paid. So when you look at a P&L, your labor for the month of November is going to be higher because there are 28 days or 4 weeks where labor is paid, and then you've got the additional 2 days that you made money but people were paid, but it doesn't calculate, so it divides unevenly within the month. So in this case, your percentage is going to be higher because you're paying for 5 weeks worth of people, but you only got 4.5 weeks worth of people, or really 4.25 worth of people, so it's going to appear higher. And then you come over to December and you've got 1, 2, 3, and 4, so there's only 4 Fridays in December. That means that your labor is going to appear lower because now you're only paying for 28 days worth of labor, but you had 31 days that you used. So 3 of those days are free when it comes to the labor because they're appearing over the course of months, over the calendar break. That can be very, very interesting when you're trying to calculate what your percentage is. For that reason, it is very important that when you want to see an accurate labor, you look at the very week that you did it. The numbers that you send in on your payroll are the numbers that we should use to get the best idea of what our labor is on any given week. Why would you wait for the end of an entire month to determine what your labor was at the beginning of the month, when at the end of the week, if it's high, you can make an instant change. You can literally change on the spot and you don't have to wait so long. Food is also the same way. It's not as bad as it used to be, but notice the number of Tuesdays and the number of Thursdays or Fridays, whatever day it is that your truck comes, that number can fluctuate within the month. So if your month has more or less food trucks in it, it is going to change your percentage, which throws the P&L off. So there's really no point in using the P&L when you have resources at your disposal, such as your sales tracker, so you can track the numbers that matter. Another thing that I didn't mention was you have insurance. The store has insurance, and insurance is billed 10 months and not 12. So if you were to look at the bottom line, you're going to see higher numbers in November and December because you're not paying insurance. However, in the middle of the year, we get an audit account, which means at the beginning of the year they do the audit and then they determine what it was supposed to be, and in the middle of the year it'll either spike or drop. Honestly, it usually spikes. So we have insurance for 6 months at an average rate, then it spikes up to way higher because we're accounting for the beginning months that didn't get the high payment, and then we're adding those in, and it gets pretty weird. All of that information, I know it's a lot. I want you guys to be business savvy. I want you to understand how business works, and I am always happy to sit down and discuss profit and loss statements, what your store is earning, and what you're earning. However, I want you to know why we don't use them, and we use our sales tracker. The reason we are constantly asking you to put your information into your sales tracker is because that is how you will know how you're doing. When it comes to a business, at the end of the day, it's all about making money. There's a lot of things that go in between, but we have to see money on the bottom line. Use your sales tracker, determine your numbers, know your percentage rates, because if you're running a high percentage, that comes out of your sales and you can see whether or not you're making or losing. The only way we're truly making is if you're hitting those numbers of 18% and 34%. As you go up, what's left on the bottom slowly diminishes, and that's if you had anything on the bottom to begin with. So please use your sales tracker, know your numbers, and learn how to see how a business works and how it makes money. Ask me if you got any questions. I am happy to explain anything from this video. Leave a comment below if you have any questions or if you have any input in this, and let me know if there's another video that you want to see. Thanks, guys.